The Reserve Bank of Australia is considering extreme measures. Let's have a look. Good evening, everyone. Florian Heise here, and welcome to another episode of Heise Says. Now, the RBA is apparently considering extreme measures to deal with the economy, and that could be why my hair spontaneously fell off. When I thought extreme measures, I was thinking this: the ending to Fight Club. I'd say that's an extreme measure, or a form of, shall we say, debt jubilee. What would you think are extreme measures, everyone? Let me know in the comments some suggestions, because I think that, and here's another image, I think that what we're going to see from the RBA, and we'll have a look at it in a moment, isn't going to be that extreme. I think they're overselling it. And if you haven't seen Fight Club, I highly recommend it. Now, let's read this article from the news.com. And don't worry, I've got my Steiner coffee here. We're almost out of ammo. Reserve Bank considering extreme measures to save the economy. Okay, extreme measures. So as interest rates approach zero, the Reserve Bank of Australia is considering extreme measures to try to avert an emergency. Remember when our current interest rates was considered an emergency? That's why it was put so low. Well, no, not even now. Like 1.5% was extremely low, or 3% was extremely low. And now, what are we at? 1%. What happens if the RBA cuts rates to near zero and the economy still doesn't respond? What happens? The Reserve Bank of Australia has cut interest rates to 1%, and despite what you might hope, nobody expects them to stop cutting. The bank published this chart the other day, which shows despite interest rates at record lows of 1%, the market expects rate cuts out to late next year. Okay, so they're expecting more rate cuts to late next year. And what this chart doesn't show, is the potential for it to go into negative, for rates to go below zero. And that has happened in several countries around the world. And the IMF is talking about it with regards to advanced monetary policy. Theories where they can really encourage and manipulate you to spend. So the average expectation for rates is to fall to 0.37% by September next year. That exact outcome is unlikely unless the RBA starts cutting rates by odd amounts. So think of it as a roughly 50-50 chance the RBA will have rates at either 0.5 or 0.25%. After which, they have either one or two cuts left before rates are at zero. What happens then? Then they go to extreme. But let's have a look. For extreme, I would argue debt jubilee. I'd argue negative interest rates. But let's see what they're talking about here. Quantitative easing. So printing money, essentially. Last week, the Reserve Bank gave some very timely hints on what it might do if the economy needed more stimulus. But there was no more room for official interest rate cuts. It was at pains, mind you, to call that situation unlikely. So, what is this unlikely situation? You might remember the US instituted a program called Quantitative Easing during the GFC. Our program will be designed to be similar, but slightly different. The central bank would, it hinted, buy financial assets in exchange for cash. In the Australian case, the RBA is talking about buying Australian government bonds. We could take action to lower the risk-free rates further out along the term spectrum, said the RBA governor, using language that refers to government bonds. Okay, so what would happen there? Who owns government bonds? Do you own bonds? Do I own bonds? Australia is one of the countries that has the most significant portion of our population owning shares and investing in the markets. I would hazard a guess that the majority of bondholders, and don't hold me to this because I haven't done any research, but it's just a guess, would be institutions, or maybe super funds or large organizations, not average people. So what will happen to that money? The increased value of the bonds, what would happen to all that money? What would it get punched into? Maybe equities, maybe other parts of the market. Would it stimulate the economy? Would say that it went into a bond and then drove another equity up? would that have the same wealth effect as direct stimulus to the population? Would it have the same spending effect? Let me know what you think. So Australia's official cash rate, there you go, peak at 14% and down to 1%. So they're really doing whatever they can. Well, no, not really. None of this, I would say, is extreme. I mean, QE is not extreme. It's being done all over the world. So bonds are how the government borrows. Here's how it works in simplified terms. The government offers to sell a piece of paper that says Australia will pay you back $1 million in 10 years, 10-year bond. Someone buys that for, say, $900,000. In this way, the government just borrowed $900,000, and the $100,000 difference spread over 10 years is the return on investment for the buyer. The return on investment in bonds is known as the yield. It is usually expressed as a percentage, and it's really important. The yield changes constantly in the secondary market as people trade the bonds they buy at varying prices. When the RBA buys Australian government bonds from the people or institutions who hold them, it is expected to have an effect on bond yields. The reason? Bidding to buy bonds will push up their price. The price of a bond determines the return on it, aka the yield. The higher the price, the lower the yield. For example, imagine if someone bought that 10-year bond mentioned earlier for $1 million. It would have a yield of 0%. Yields can and do go negative. For example, if someone bids over $1 million for a promise to be paid $1 million in 10 years' time, it sounds crazy, but it is happening right now in Germany and Japan, as the next charts show. Australian yields are still positive, although much lower than a year ago. So we can see here, I mean, there you go. And the reason why this sounds crazy, and the reason why this is happening, and this was explained to me in a comment on a previous video I did, it's because of the scale of the organizations, institutions parking their money in these vehicles. That's why. It's different to a normal person who can just fill all their wealth in a suitcase pretty much. Although now it'll soon be illegal to spend more than $10,000. But don't worry, I'm sure they'll inflate our value down to nothing anyway. We'll probably be able to do it in American dollars. You know, there you go, in an envelope. So, but why bother playing with bonds? Interest rates for real borrowing, for example, credit card interest rates, mortgage rates, business loan rates are almost always higher than the official RBA interest rate. Even if the RBA interest rate was at zero, those interest rates would not get to zero. Buying bonds is an attempt to get them closer to zero. By buying bonds, the RBA hopes to deliver reduced bond yields in government bonds and indirectly, via spillovers in the market, push down other interest rates in the economy. In this way, they hope to encourage economic activity. Europe's the best example, is it? They've also had success in lowering government bond yields, which is a risk-free rate, and therefore they've had success in lowering interest rates across the economy for private borrowers as well, said the RBA governor. It's a convoluted process, but this is what you're left with when your normal monetary policy runs out of ammo. Well, this is the problem. It's because we are living in a system that only uses monetary policy, that doesn't look at alternatives. There's been historical precedents where economies have gone well. I'd say the boom-bust cycle is really magnified due to this monetary policy. The weird thing about this. So what's crazy about all this is we're talking about an extraordinary kind of monetary policy when the economy is not extraordinarily bad. Yes, growth is a bit low, unemployment is a bit high, wage growth is weak, wage growth is non-existent, but it's not exactly a crisis. When the US brought in its quantitative easing policy, it was in the midst of a severe recession. Australia is talking about bringing it in now. There's something disconcerting about that. It's like we have to have the accelerator slammed flat to the floor just to go through a 60 zone, and we're still not even doing 60. One answer might be for the Reserve Bank to get extra help from the Treasurer. While we are approaching emergency measures on the monetary policy side, he is running a comfortable budget surplus. It will probably be wise to use some of that budgetary space spending to prop up the economy rather than getting to extreme measures such as quantitative easing. So this is Jason Murphy, an economist. So I'm going back to my Fight Club example. there are much more extreme measures than QE. Much more extreme measures than QE. Or perhaps that's just the world that I'm looking in and what I'm reading on. And I mean, we've got the tax cut that isn't working. And let's have a look. Countries with negative interest rates. I'll just bring that up here. Switzerland, Denmark, Sweden, Japan. That wasn't mentioned at all with these extreme measures. Although there's a lot of concern with it. They're attempting to normalize negative interest rates, or at least Bloomberg is in previous articles. And what do you think? Do you think these are extreme measures? Doesn't seem to be. I think there's a lot of other options that they can do. But we'll see. We will see. I wonder if it'll work. Do you think it will? I don't know. Anyway, guys, like, share, and subscribe. Let me know what your extreme measures will be, or what you would do if you were in the Reserve Bank. Would you just say, that's it, we're going to gold, silver, dual currency? Why not? Or switch Australia to Bitcoin? Or give a debt jubilee and everyone who has under $50,000 salary gets their credit card wiped clean. That'll stimulate the economy. Bloody oath it will. It may not be fair, but I somehow think a lot of the stuff with regards to monetary policy isn't fair. I think there are a lot of people profiting through this whole mechanism. Anyway, guys, let me know what you think, and I'll see you all again later. Take care.